Hi everyone, my name is Roman, and today I want to share you my market approach. As you know, in the market we have a lot of strategies. For example, my one of my favorite strategies and approaches. It's when you follow your trend, okay? But here I have my approach. What I mean? I mean, I use only one indicator. This indicator, it's a 200-day moving average. So, what you need to do, if you want to use this indicator. So, the first thing, you should use only one time frame. Here it's a daily time frame, daily chart. And here we have a few rules. The first rule, the price should close uh, above a 200-day period moving average. For example, here, that's our entry. So, what about our stop loss? If we take this case, 1 second, please. Long position. So we have very good risk reward. What I mean? Our stop loss, we do above a moving average. For example, here stop loss it's 10%. 10% risk, yes, and at the same time we have very good we can take very good profit, plus 37%. Okay, so we can now I will show you another stock, for example, I know Nvidia. So if you take Nvidia, yes, very good case. Price goes above a 200-day moving average, and here we can do the same trade. Our stop loss will be here. And after that, you can see this good potential profit. One moment, like here. So we have good ratio. Our risk, 17%, but potential profit against potential profit 95%. Okay. Next one. For example, Microsoft Corporation. Microsoft Corporation, I showed before. Next one, for example, Alphabet, Google. So here we have the same situation. Price closed above a 200-day moving average. Not that. As you can see, well, very good bullish impulse here. So our risk, very good ratio. Our risk, 8% risk. It's our stop loss against 94% profit. So it's very good ratio. So if you want to use this strategy, you should know two things. The first thing, price should close above as I told you, above a 200-day period moving average. For example, here. Yes, obviously we will have a fake signals. It's normal. It's okay. It's not bad thing. So sometimes sometimes we will lose money. It's okay for us. But if you take another rule, so the first rule, as I told you, the price should close above a 200 days moving average. The second rule, the price should touch this indicator or will be near this indicator. For example, here it was very good enter. And as you can see, we have very good ratio. So our risk 6%, our stop loss, and our target plus 40%. Very good ratio. Okay, for example, here. Our risk 7% against 27% profit. So, okay, if you're interested, I will show you indexes. Example, index S&P 500, S&P 500, sorry. S&P 500. So here we have the same pattern as I told you before. Our entry here, this candle, it's our stop loss. For example, 2%, or maybe you can use 5% risk. Doesn't matter because we will have very good profit against risk. So it's a very good ratio. You have 4% risk against 29% profit in index S&P 500. Here, look at here. Our risk. Okay, sometimes we can take 5% risk on one deal. It's not a problem, but we will have very good profit, I would say. 5% against 5% risk against 44% potential profit. Oh, that's a very good example. I told you about the main scenario when the price close above a 200-day moving average. But at the same time, we have plan B. So what is a plan B? When price touch this moving average. And here we have very good potential, bullish potential. 2% risk against 12% profit. It's a very good ratio. So if we take, I don't know, Bitcoin. For example, here it's a very good example. Our risk 5% against 47% profit. Here Sorry, people. Sorry. Even here, you can see 9% risk against 23% profit. Oh, this is good move. It was very good impulse. Here. Okay, we have 12% risk against. Whoa, oh, very good ratio against, I would say, against 149% profit. So risk reward ratio, oh, 12. Okay. So we can choose another assets. What about what about US dollar, Japanese yen? Yes, it's a very good example. Here, for example. Here, it's our entry. It's our risk. 1% risk against, one moment. %1 risk against 8% profit. But if you take Forex, it's not the best market for this strategy. I will I will I would choose stock market or crypto market if you want to trade on this strategy. Indexes. So what about gold? Gold. Okay. One moment. What is it? No, it's not. It's gold index. US dollar indexes. Yes. So if we take gold, we have the same situation. For example, here, I told you when the price above and near 200-day moving average, you can do trade here, for example. Okay, it's our risk 6% against, one moment. Okay, even here against 31%. So guys, it's very interesting strategy for your trades. It's I would say it's more for swing traders. So if you like what I do, subscribe to this channel. Next video, I will show you my approach on the Forex market. Like, have a good day.